Good morning, guys, and welcome to today's market update. Today is April 29th, and it's 9:42 a.m. in London when we're doing this market update. Let's take a look at the markets, see what's going on, and talk a little bit about the different setups and opportunities available to us. I also want to bring your attention to today. Today, I'm going to host a special webinar this afternoon at 5 p.m. London time. I'll put the link in the chat box, and it's a webinar with ATFX, and we're going to talk about what happened on Monday, April 20th. So what happened with crude oil could have been predicted, and the importance of storage facilities, and sort of what happens in this situation and what we can expect going forward. So it's like a webinar where we focus more just on the crude oil crash. And if you want to sign up for this one, which is a free event, then just click on the link that you'll find here in the chat box as well. I'm going to put the same link on my Twitter later on today, so you have that as well. If for some reason you can't find the link or something, just ping me as well on AlexFX00. You click on that link there, and you can reach out to me. I'll send you the link as well here to my Twitter, so you can follow me and ask questions. I'll do my best to try to reply back to all of you, but sometimes I get a lot of messages and I need to prioritize. Okay, good, guys. Let's kick off then, and we're gonna begin with the fun stuff. So we talked about, being bullish the German DAX. I even said take a look at some of the European markets yesterday. I even did an article about it actually on Investing Cube. If you click on about an authors, you'll find my thing here. And I said why the bullish breakout in the FTSE 100 and the Nikkei 225 is important. So it's about this one which really interests me the most, which is the FTSE 100. So I'll take a look at that one first. Let me see if I can find it. So this is the FTSE 100, and this is a 4-hour chart. And the market has had until recently been stuck in what we call an ascending triangle. An ascending triangle is where you can put like a horizontal level like that, and then you can draw an upward trend line. That's an ascending one. Then you have the descending one, which is very, very similar. And the idea is just to buy on the breakout, and then we'll see how far it goes. The target, though, is usually the base of the triangle. And if you want to go more narrow, you can take half of the difference here, which is 6.54 or 364 points. So this is the longer term target, which is sort of something we can reach. In the Russell 2000 as well had similar patterns. And what's happening in general is that you have a lot of other markets that are trying to catch up with the US ones. And this is one of the European indices that are trying to catch up. Other ones as well are trying to catch up. So things are going in the right direction. And you might ask yourself, why is this happening then? Because the markets move ahead of things happening, unless of course there's something unexpected. So the fact that we got the coronavirus was unexpected. That's why the whole thing tumbled. But when people realized that things are going to be really bad, that's when we saw the tumble in prices. And I know all the data is bad and will continue to be bad throughout April because we're under lockdown. But the reason why people have been buying is because they think there's going to be an end to this. So by the time your government tells you can go out on the street, this thing has probably been risen quite sharply by then. And that's not the time to buy, because you need to make successful investments. You need to just buy ahead of everybody else. So you always need to be out on a limb. You always need to take a chance that everybody else is not going to follow you. Because if you buy when everybody else has bought, then it's too late. So that's what's happening here. There's no point waiting for the data to become better, because at the time we're up here, if we are up here, the data will be better. And most likely it will be better. It can't get much more worse than these levels here. If you think about it, it was like the worst numbers since, like, industrial production dropped to levels not seen since 1946, which is the year after the World War II ending. the number of people in London that have died is matching the numbers of people that were dying on World War II, apparently, during the Blitz. Apparently, I think that was the headline on was it the BBC or the Financial Times, something like that. That was the headline, by the way. I didn't read into all the details. Maybe on a weekly basis. So that tells you how grave the situation is. So for things to turn worse, well, they need to go worse than what happened during the Blitzkrieg, right? How likely is that going to happen? Could happen, but everybody's taking precautions, and that's why we're seeing the number of deaths, people declining in some parts of the world, and the number of infections, more importantly, slowing down. So that is looking good. What else about the stock market then? Well, this is the German DAX. If you want to be bullish, you can be bullish. We were bullish from down here. We reached the first set of profit targets. You do have the break to the double top here, and the difference between double top and low gives you the target. So you have a target here of about 11,400. The only issue here is that they had quite a bit of a run up here, so I wouldn't be buying it right now, right here. I do prefer a little bit of a pullback. There's a high likelihood that that's not going to work out though, but I don't care too much because we have other stuff like the FTSE, which is beginning to trade upwards. So I'm bullish. I'm bullish from here. You have the S&P 500, which we also talked about over the last few days to be bullish. We went up to pretty much what we wanted it to be. We just had a break to this high. When we take out one high, we go to the next high. But the only issue with this is that we do have the market is, I don't like to do trend lines, but I'm just going to do it to explain to you. We have some sort of, I wouldn't call this a channel like that, but yeah, actually it is a bit of a channel, right? So the idea would be in general to buy closer to the trend line, so to speak, waiting for that pullback. Could it be a situation when we don't have that pullback? Of course, we may not have that pullback, but we did have the breakouts in the FTSE 100 and a few other European stock markets. There's one that's barely broken out that could potentially catch up. That's where I would put my focus on. What else? This is gold prices. So what I've done differently here compared with yesterday is that I pushed up the buy spot a little bit. So push it up just to this low here, which is yesterday's low, because we had the buy spot a little bit lower and we missed that entry. So now the buy spot begins at 1691.49, and I think we can revisit this, and we might go down, but as long as I trade above 1656, then this is a bullish uptrend. What else? Crude oil prices then. So crude oil prices, we got that spot on. In fact, we've been getting crude oil trading really well lately, but we got that spot on a few days ago. We said sell here around 18. The thing went down, reached profit target area. We moved up a bit, said this is level to book profits. If you notice the difference here compared with the chart I showed you guys yesterday, instead I have lifted up the buy spot a little bit, or sell spot to 1538. So between 1538 and up to 1909, I think people are gonna sell, and then they might target the lows again. That is crude. Let's take a look now at EURUSD. So EURUSD, yesterday the market did trade above my trend finding level, and since then it pulled back. Looking at this today, we are capped by 108.97. So you do have a bit of a bearish bias below this level, but and if we take this out, we're going to go a little bit higher. If we remain below, we can go down to maybe 108. But this is something that is trading sideways. So that just, when that happens, the market is trying to figure out, it tries to break lower. Well, that did not encourage people to sell. It might try to trade higher now, and people are going to see if that's going to be encouraging for people to sell or to go long. But we're not seeing that right now. We have the ECB rate meeting tomorrow. That could be a mover. I think if the ECB goes ahead and starts to buy junk bonds, then that could put some less pressure on the euro, and the euro could gain a bit, because what's happening now is that people are selling Italian banks and Italian companies their debts and their bonds, and because they're afraid that they're going to get in trouble. I think it was yesterday. So this is 3 big rating houses, and one of them downgraded Italy, so they're just one notch above junk. And what happens is that if they get pushed into the junk section, then there's a high risk that a lot of these portfolio managers, they have some very strict rules, and those strict rules are you can't buy junk bonds because junk bonds are a high risk of failing. You might lose all your money, and that could put immense pressure on the ECB, huge pressure on the euro, and it's because the debt to GDP ratio is gonna approach maybe 150,000, no, sorry, 150%, 160% of GDP. That means that their debt is 150 times, no, so it's 1.5 times whatever they make in a year. So, and they don't like that. And long story short, if they get downgraded to junk, they would need to be, a lot of these investment managers, they would need to sell their holdings. And that just means that the interest rates in Italy are going to go up, and there might be a proper crisis. And that is obviously something that the ECB wants to avoid. However, though, I don't remember which of their trade, I think it was the S&P that downgraded, the company, the S&P that downgraded Italy yesterday. But they said even if, well, they didn't say this, but the idea is that even if the central bank is going to buy all your bonds, it's not enough to leave them at that rating. So it's definitely stressful times for the Italian governments right now, and probably even the ECB. So if the ECB tomorrow can go out and buy things, then that could help, hopefully. But clearly, I don't know what needs to be, some sort of rescue package, or writing down loans to Italy maybe to improve that those ratios. But yeah, it's a difficult one, and the chart is telling you the same. It's a difficult thing here. People don't really know. Again, short and bearish below this level. I go down a bit, bullish on the way up. GBP versus the USD. All right, so this is GBP versus USD. What's it creating looks to be like a head and shoulders, with a head left and a right shoulder. And the best way to trade that is to wait for a break to 122.42. Take that out, we can probably go lower. The market suggests we can go as low to 118.50. If you look at it from a bigger picture perspective, it's not unsurprising if we go down, because we do have a bit of a bearish bias, and we might go a little bit lower. I think there were some comments a few days ago that Brexit is Brexit, it's still going to happen. They're not going to change the laws, even if there's not enough time. And there's a high risk, that the UK might crash out. There's all of that stuff. So what should we take a position on today? Probably not. It's probably better to wait for the break. The alternative is that we go down to 123.20, and from here we have a little bounce. Because if I get rid of everything, you can still see we have a bit of a bullish uptrend. Now this is dollar versus the Japanese yen. And the dollar versus the Japanese yen is bearish. It's bearish below 106.89. We sorry, my son just entered the room. It's like that when the nurseries are closed. So we do have, if we do have a break to we did have a break to 106.89. All right, guys, I think we're gonna cut this short. But you can see here, right, this break to 106.89 can open the door, and we can see a little bit of a tumble. Okay, guys, thanks so much for joining me. This is my little one here. All right, guys, I'll see you guys tomorrow.